Hey everyone, I hope everyone is doing best at this particular time and a nice weekend. Today I have one of my friend Himanshu with me. I've been following Himanshu for almost over a year now. We actually started discussion one on something we actually had a disagreement at one time. I think we there are a lot of things we don't agree with each other, but I think the discussion we do with each other is actually very healthy. We help each other in building our thesis at times, ask questions, and that eventually become part of our thesis. And I learned a lot from him over a year. I saw him doing several trades which looks audacious to me at time, but over the time as the market played out last year, I think he made some really good calls. So this made me interesting to know more about him and to understand like what is his investing style, why he picks certain companies, so that I can learn and I hope some of you can also benefit with the discussion. So welcome, Himanshu. Would you just introduce yourself to everyone briefly, like what do you do and who you are?
Right. I'm based in Phoenix. Currently, I'm working as a business unit planning manager in on Semiconductor. So I have some semiconductors background, and also doing part-time MBA in ASU in WP Carey School of Business. Uh, I may be choosing finance as my specialization, and
Okay, so
I would like to do some investing as well, and I usually do that like every day.
no, that's okay. I mean, I have to ask a question which I didn't plan, but I don't think you'll be in trouble. So, what is going on in semiconductor industry, man? I mean, since you are in the middle of this, you would be able to share some insights to us. Please do.
Right. So in semiconductor these days, demand is like overblown. Demand is going out of the roof, and basically my job is to manage supply demand gaps. So that gap is currently increasing because the demand is not stopping, and our capacity is running out because we have huge demand. So also there are like some natural disaster issues as well. Sometimes we have fabs all across the world. So recently there are some tornadoes and some typhoons in I guess in Philippines and some part of the Asian countries. So it reduces our working capacity, like less people comes to the company to do job because of this natural disaster issues. And in COVID times, we had to stop working sometimes. So because of that, those gap increased, and
Okay.
we need to fill that gap, and every
So,
company or every foundry company is doing that now.
but do you see like a lot of time the countries like for example India, US, and a lot of European countries are now saying that we want to bring the semiconductor supply back to onshore because of the strategic situation emerging between China and Taiwan. Are you seeing this just happening on ground? That means companies and countries are really trying something to bring back, or it just blah blah blah?
So I think it's sometimes we consider is blah 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 because in this new world, countries don't just invade other countries, but Intel is taking initiative building some fabs so that even technologies shouldn't be compromised because they have a lot of defense and other contracts. They supply chips to those companies. So they're building $12 billion fab in 12 or 20, I guess, in Phoenix, Arizona. They also, like Pat Gelsinger said, that he will be building one fab in Ohio in their recent quarterly earnings. So I think even in India, I think Tata Group decided to create some foundries there. So semiconductor demand is booming because of all this digital transformation. Every EV company or like even like traditional motor companies require chips, IoT require chips, data centers require chips. So demand is growing, and I don't think it would reduce at least for 2 to 3 years because data is saying all the foundries are run out of capacity, and they already have orders in place. So there is boom. and it will be continuing. So
That
we
makes
have
sense.
sector
Makes
macros
sense.
in our side, at least in
Makes sense.
semiconductor.
No. So tell me one thing, like because like this is my view, and I could be wrong on this. Okay, my view is that Intel missed the whole mobile chip revolution. Okay,
Right,
now what is happening is with the incorporation of ARM technologies in Apple, in Windows, and Google is coming up with their own tensor processing unit. Tesla is using their own DPU moving forward because of their own AI vision based technology. So what we are seeing that there is a trend emerging that where companies are trying to work on their own silicon to
right,
specify and differentiate their products. And in this race, especially like if I have to compare M1 versus Intel, I mean, M1 is kicking Intel in performance, in max, like anything. Because I have the, I mean,
yeah,
have an MSI and I have an M1. I mean, like this is like a whole different level. I'm seeing
right.
things. So
M1 is
how would
like
Intel
super.
will? Yeah, so there is a volume angle where Intel has an upside because there's a lot of demand coming up in the market, but then there is a premium portion where like performance, and this is where it is hurting Intel. So it created a kind of a very strange dynamics for them. How do you see it moving forward?
I think even I heard Apple started hiring some people in San Diego area. It would not just affect the Intel as well. It would also affect the companies like Skyworks and Corvo as well. They are Apple supplier, and they means whenever Apple builds the product, they make sure it should be best, and it always have been the case same even in the past. So means I don't know. Even some of my friend works at Intel, so I can't say much.
No, it's okay. I mean, I agree. I mean, the way I see the situation is like because like when I saw the Intel announcement by their CEO that we are going to invest 43.5 billion, I
Right,
have a view, and I spend my career working with executives and
right,
sometimes helping them curate messages for their investors when they are in trenches. Okay, so
right,
this message, 43.5 billion, is a kind of a message that is focused when you are short of plan. So how do you overcome that? You say, I'm going to put a lot of money.
right,
Okay, and this is exactly what we saw that incumbents in EVs were doing 2 3 years. I will put this much money so that investors and then CNBC jumps on it. Oh, so much money is
right,
coming for this company. See, money is not the guarantee of success, and
right,
that is one of the thing we have seen. So, for example, like when Bill Gates started his foundation, and he was the richest man in the world, and he said, "I'm going to work on all the things that society needs." And how many
right,
things he worked? Plenty. And how many he has impacted? Zero. The only biggest impact he has created is the distribution of polio vaccine in several of the country. But he didn't
right,
invent polio vaccine. He provided capital for distribution.
right,
Okay, so he didn't. So as far as impact investing was concerned, and then the Elon Musk came, and Elon Musk has 180 million, and he said, "Okay, I'll do Tesla, I'll do Solar City, I'll do SpaceX." In theory, with less capital, he created more value.
right.
Okay, so when I see like CEOs going on record and saying, "Oh, we are going to spend this much," I always take it as a red flag. What do you think? I mean, is it a fair way to look at things?
When capex is that much and that big, I just don't buy that stock, because we know for sure if they are spending this much amount, they need to recover those money in future cash flows, and it takes time, so your money is just stuck. So uh, means even I'm not investing in Taiwan Semiconductor manufacturing company, because they are also spending almost $100 billion all across the world building new foundries and all. But in meantime, if you wanted to trade those companies again, you can trade between channel like when TSMs come down to $108 or 110, you can just buy call or just buy stock, and when it goes to 135 to 145, you can just sell it. So in between, if you wanted to play earnings or some months, you can play like that. But when company decided to spend that amount of money, I think you should just don't buy these stocks for a while, because we don't have that much years on our side in this market. Like SaaS and cloud companies having very less capex, but they are turning even net income positive these days. So and momentum is on their side, digital transformation is going on. Even every oldest and traditional companies, even banks from like southwest or midwest part of the United States, it's trying to go on cloud. So there is a boom, and if sector macro is positive and it's on your side, you should play these plays.
No, makes sense, man. I think that's really helpful. And guys, everyone who is listening now or in the recording later, please advise it's just a discussion. There are no financial advice in this one. So please do not make
Right,
any trades based on our discussion, what we are doing.
it's just our views.
Yeah. So let's move to this part. I think this is something which I'm most intrigued about is uh, I have seen, I mean, like some of your trades you have made, okay,
Right,
and you made bold calls in a lot of service. Like for example, there's a lot of people are having momentum and they are behind a stock sometime, and you take a very different position at times. Okay,
right.
sometimes even you're on the same side of trade, but you have different reasons to be on that side of trade because of either the length and the duration of the trade. So how do you? I want to understand like what is your investing style? Like how do you define like yourself?
So mostly when I have less money on my account, I trade options. There is one side of me which I do long term trades, and I hold some stocks years over years. Just like in 2020, in March, I bought Berkshire Hathaway. In that time frame, I still hold that stock from 169 $70 till today. I even bought Microsoft back then. Then very few Google. I was running out of my money, but in daily day to day trade or monthly trades, I mostly do options. And back in November or like September to November, there was means like annihilating pumping in stocks. I have seen stock like Upstart or like Cloudflare. Means Upstart second quarter result, like after July's result, it went from almost from $110 to $400 till September, or yeah, I think September to November. And in that time, I think like it's just going up, but its revenue within that time frame, or even for next 1 year, it that pricing shouldn't be there, because it was like more than 100 price to sales. Even the same case with Cloudflare, but they are not growing by 100%. YOY and QOQ, it doesn't matter that much. So that time, even in Cloudflare, if you see, it started running from $60. In May 2021, it was at $60. In May 2021, Unity Softwares was $78. So Cloudflare went from $60 to $137, then retraced back to 110, and from 110 there was unstoppable pumping in that stock, and it went up to almost 195 before that November 5 year. Then what happened after a year, it went up to 200, means it opened at $216 next day, then it went up to 220 and retraced back to 192 and closed almost at 196. Then I saw that because it didn't able to hold that, means or sustain at that highest point. And after some days between 5 November to 18 November, it again went up to $220. But even that time, it didn't sustain and it fall back to almost $182. Then again, it went up to $205. So that time I decided it isn't sustaining at this point, so we should go short on that. And means it was way overvalued back then. Means it's growing by really nice numbers, uh, percentage wise as well, but that pricing doesn't make sense at that time. So I shorted that one. The same case with Unity Softwares. After their Q3 earning, I guess, it started pumping from 155 to almost $210, where I think the last day Motley Fool recommended it at 205 or something. At that time, I decided to short that one. Even some of the people or friends I talked with, we went short on Unity softwares, because it that valuation doesn't making any sense. It was just analytic pumping just because of Metaverse plays, and we know for the fact that Metaverse revenue isn't coming within 2 years, even for like 3 to 5 years. So that time we sorted Unity softwares, means I had some put debit spread 200 to 155, 190 to 150, and those printed really good, means it was come down to $120 even before December's 17 December's expiry, I guess. And even on Twitter, I went against people's sentiments when it comes down to Nvidia. Nvidia is a really good company. I love that company. I was bullying Nvidia in last 2 years, but uh, in May it came down to $136. Means we can take it as a after split pricing. So from that price, there was that ARM deal and everything was. Those news started flowing in June, July, I guess. Then it went up to $225, and there was also split news. If you check it, it went up to $900 or something. So after that, what happens? Their price to sales ratio increased too much. Then there was some that October 4th fall in all indices and all. That time Nvidia came down to 185 or something. But after that, they started going up. They came to almost $245. Then Facebook, I guess, they said they will be giving contracts to Nvidia to make Metaverse chips, uh, probably for Oculus, that Quest 2 or something, those products. And people are saying like their ARM deal is going to finalize or something. Then from that $255, it almost went up to $313 in single or 2 days. And you must have seen that. Means that was like $50 pumping in Nvidia in single day, back in November or September, October, I guess. So that time it was means that revenue isn't pricing in, and it's not going to be priced in even for like 1 or 2 years or 3 years. And it was just pumping, and then even honorable speaker Nancy Pelosi was also having some long-term calls on Nvidia. So that was also another point. But then it went up to $345, and it was stayed there for like lot of time. In November, $320, 345, and again, means they come down to $273. Then there was another pump in, I guess, start of the January 10th or 11th Jan, where it again comes to $324. But when it was at $340, we decided to go short on that one. No, absolutely nobody liked that plan to go short on Nvidia. Even some of my best friend didn't wanted to go short on Nvidia. But I had a conviction, because, and that's why I don't wanted to time the market. I didn't bought any weekly or monthly calls in November. I bought March 18 puts. So because I wanted to have some time from my side, and I bought a $300 put for almost 1,850 or $1,900, and my price target was 227 to $233. But when that January 24 happened, that 1,000 plus rate day on Dow Jones and even on Nasdaq, it was a very, I mean, it was a Black Monday. So that time Nvidia came down to 208 or $10. So it actually exceeds my expectations. So that time I removed those puts. But
Makes
I
sense.
want,
I think so. So correct me if I get your investing style. I mean, I'm just trying to make so. I mean, you may not do a lot of charting and all, but you have some sort of like an innate sense of price action, which you watch closely. I mean,
Right,
and I mean, like you don't have to do a lot of technical sometime to understand how the price and the strength look like if you are so much used to watching it. You also have a sense that okay, if a stock has to increase in a certain direction and in a certain amplitude, it has to be somehow sustained with either the macro or the performance in the company. If it diverges from it, then it's going to be a some sort of mean reversion that you try to identify again, like based on a sometimes subconscious, sometimes innate ability you have, and yeah, you try to go
right.
with it. I mean, you have done it few times. You have seen success, so your conviction on your investing style is increasing with time. Is that fair?
Yeah, yes.
Okay. So, I mean, now I have a question. I mean, like, this is like, so you mentioned like example of some companies you went short. So, portion of this question is already answered. How would you define like some of the example where you went long against the common trend and it worked out for you?
So recent example was DoorDash. So what happened? Every growth companies was falling down, and after result, everything was going down like 30%, 35%. Like companies was acting like altcoin in cryptocurrencies, like falling down by 30% after a year or 40%. So in the recent example, my point to go long on DoorDash trade means I specifically mentioned that thesis on my Twitter, like why I would do some bullish option strategy on DoorDash, because their last 4 year they always had the positive price action, and in last time I guess in May they had the breakout around $110 area. So when that breakout happened, it went up to almost 146, then $158 in two days. Uh, and in this November, December timeframe, there was like that Omicron situation, and those news were flowing in. So me and a lot of my friends started to open their DoorDash subscriptions once again, and also people were started ordering in more. Uh, of DoorDash deliveries. So I had that thesis like I knew they would be having nice revenue for fourth quarter, and they are near around their breakout area, and also like they were having their fair value is $160 by Morningstar. So I thought like it's very down, and last year, when I saw their price action on before the year day, it was like they come from $198 to $187. And after the year, they announced they bought or trying to acquire some European food delivery company, and then they went up to $256. So I knew their price action is almost more than 10-15%. So on the same year day, what happened, it fell down from 104 or 5 to 95 $94 on the year day, just before year was going to announce, and they closed almost at $94. But I had that thought in mind to do some option strategy on it. So I bought $105 call and sold $120 call. Means I did call debit spread strategy there, but I had conviction, so I went ahead and bought 250 shares as well at $94 or some cents. Then what happened after a year? It fell down to $84, but my convictions was strong. So I was telling some of my MBA buddies and some of my friends who do investing with me to start buying that stock, and then it went up to $120. So at 119, I sold my commons. Then again, it went up to $131. And that time, people who were so afraid that stock were falling like crazy. Means the same day, I think Amplitude year was released, and it fell down from $44 to 17 or $18. So it was disaster. So everybody was in fear. But if you have some conviction, and if you knew the price action and breakout area from past, it's always a good thing. I always go to that Market Chameleon website and check what was their price action in 2 days before the year and after 2 days, and try to build some of my conviction. So that was the recent example. In February 2, I guess, when there was three year I was watching Facebook, Spotify, and T-Mobile. So I was long on Facebook. I lost some $650 on Facebook trade because I was overconfident on bullish side. That was the wrong thing. Even some of my friends told me to hold some one or two puts on Facebook. I wasn't having commons back then, but I didn't, and I lost on that trade. But on same day, there was Spotify year earnings was there, and it was also around $190 or something. So I was long on Facebook, but I was short on Spotify, and there was a T-Mobile year earnings was on that day, and T-Mobile was at $108 or something, and it was their breakout area in previous times, and it was pretty cheap at $108, and it's the only growth company I consider in telecommunication sector. So I was confident on them, and there is also 5G play is there, so sector macro is good for them. So that time I was buying $110 calls on it. Next day after year it went up to $122. So you also need to consider the breakouts area as well, and you also need to check like how much it is down from their fair values. So that's also good study to do to play some year. But this
Like, makes
2020,
sense.
2021 and 2.
You said something that you identify them as the only growth company in telecom. Could you elaborate a little bit more on that, because that will be something very interesting.
On which one?
The one telecom company you just mentioned recently, na, that
T-Mobile.
T-Mobile, that you said that this is the only company you consider as a growth company in telecom sector.
Right. Because what happened when it was at almost 105, $108, I think Berkshire bought that stock last year or like in 2020, and it went up to 145, $46. And then again it retraced back to 100, and it also crossed almost $100 or $102. It came there, but they sustained that price. They didn't go below that. And I never
Hmm.
like AT&T company for investing. It just it's not even useful in options or commons. It just stuck money play. You get dividend. I don't want a dividend from them. So AT&T is gone. Whereas on you can just trade between 50 to $58. Means Berkshire has some $8 billion into it, but uh, it's just like FD kind of thing. Means buy at $50 and get some your dividend 5% or 6. But T-Mobile, you can trade that stock from between 108 to 145. It's also it was sustaining in this downfall. I don't know where it is because I didn't have the common. I just did some option strategy on them, but it's still holding $124. While after having a good year in nice growth companies, they sold off. That's all. Means Google's year was terrific earnings. Their future growth is also looking good, but still, and they have that really good news. Like they will be splitting 20 as to one, but it still fell down almost 350 points from top, or 400 points. Uh, so it's a good thing that in this market, T-Mobile kind of company is sustaining their price levels and not falling much.
Makes sense. My view on Google, like when the Google fell, my idea was like this, that right now investors are very edgy. So whenever they make a gain, they just wanna cash it, because
Yeah.
nobody wants to, yeah,
No, but
no.
in 2022, I feel like to play this way. Buy and hold strategy won't work in 2022, and almost until Fed settle down that interest rate increase, or people even just speculate like there will be 7 hikes or 9 hikes. Nobody had a clue, like have a clue
Nobody
what's
knows. I
the
mean,
reality. So my
so
thinking is to for this kind of period, we just need to trade. on good companies. Like yesterday I tweeted about beat and raise the guidance list. So I'm trying to play just those stocks, and I'm not buying and holding something. But for your that long question, which stock I planning to go long, uh, I'm planning to go long on stock like Google. CRM. CRM fell down to $200 level, and I always like to buy good companies at 52-week low. So I started buying Google. I even started buying Facebook because Facebook's fair value is $400, and we are getting it for $207 or something. And it also fell down below that 2021 January level of $244. So price seems pretty good for Facebook, and they're like more cheaper than Coca-Cola and Procter and Gamble. So I don't worry about that.
It's like a $500 billion value. I mean, that's
Right.
quite a lot
They
actually.
have P ratio. P ratio is all
Yeah,
coming to 13, 14. So why should I buy Coca-Cola for 26 or 28 P ratio, right? And
yeah.
having and they're decelerating growth. Like in 2010 or 11, they used to make 47 billion in revenue. They are making 35, 37 billion in revenues now. So this whole decelerating growth there, and still topping at 62 or 62.5 on like last day on Friday. So it makes sense to invest companies like Facebook. Means it's in doghouse for a while. Means 1 2 year it's show me story now. But when great companies fail in that area, then you start your build your position, right? And that's my investing style. When great companies fail down and there is some all kinds of bad news for that company, but we know for the fact like that company is good, and I believe in Zuckerberg. He's like fighter. He's fighting since 2010 to 11 to like everybody with other companies, competition, the politicians. So I believe on him. So
No, it makes sense.
from
I mean, like my view on Zuckerberg are actually, I mean, quite divided at times. So when I see him as a leader, I see him as someone who is obsessed, who is ruthless, and who will do whatever it takes. He reminds me of the Bill Gates of '90s that I will do whatever it takes. Okay, I mean, of course, like on ethical side, I have a different view of him. But my view is like that. That when I see the core business of Facebook, I see a lot of cash generation,
yeah,
generate a lot of cash. They need to figure out how to support the small businesses with the data thing that is coming from Apple.
right,
And but my idea is like they will eventually figure out something around it.
yeah,
Okay. They will do it. What I don't buy in Facebook is when they over promote metaverse thing, because my view on
right,
metaverse is following. See, at the end of the day, when you go into a new technology, a lot depends on first adopters.
right,
And when you are looking for metaverse, at the end of the day, we are looking for three key technologies. The first technology is augmented reality, the third is virtual reality, and the third is the edge computing. Because when you are wearing these devices, you are not connected all the time to cloud. So that means your devices has to have more and more edge computing ability, okay, if possible. Now, when you see AR, I mean, and I work in heavy asset industries a lot,
right,
and I have for long I held the belief that the value of AI in a heavy asset industry is huge.
right,
Because for example, if I am on an offshore rig and I am wearing these glasses, and these glasses are equipped with display and a lot of information coming in, and I can touch something and it pops up a message and I can immediately record a voice message, translate it to text, person immediately. It's huge because the way the documentation flows on a high impact environment, it's pathetic.
right,
Okay, there is. I mean, when you look down and you say a lot of time incidents happen, and then you say that there was some observation, but it never captured because it was not prioritized right. So I believe that the heavy asset industries have a lot of input or a lot of money to invest when it comes for especially augmented reality. Then comes for virtual reality, the same thing. See, virtual reality is not something you are going to do 24/7, but it's an immersive experience. And this immersive
right,
experience is okay for entertainment purpose or experience purpose is fine, But immersive experience are very important even for high impact operations. Okay, like for example, if you want to simulate an underwater saturation diving, okay,
Right.
now it's a real training and millions of dollars are spent on it. So when I see from that angle, I see that a lot of money is actually going to be spent by heavy asset industries in these technologies. And since in order to work these, you also need some sort of edge computing. And same thing, like and on the other side, like gamers. I mean, gamers spend a lot of money. I mean, I have 3D headsets.
Right.
So the thing is, like, these are the two key categories which are, in my opinion, are going to be the first adopters and to spend heavy cash in the earliest phase. When I put this together, then I say, okay, Facebook doesn't have a B2B business. And in a lot of offices I work, actually, Facebook website is banned on their web Wi-Fi because of the all this data collection thing they have. So I said, when they say they are going into metaverse, that means they are already handicapped halfway that they do not have B2B business who are going to invest a lot of money in this. Then you look the gaming side. Now in the gaming side, I mean, they have Oculus which can handle several games, but when the gaming comes, it's very difficult to challenge the status of Nintendo, Microsoft, and Sony.
Right.
I've been gamer all of my life. I mean, something that I follow. I mean, it's very difficult. Gaming is
Right.
a cult. Okay, gaming is a cult, and another thing is when you see technologies like AR, VR, they are tend for hardcore gamers, and
Right.
hardcore gamers always have a view that the mobile gaming and Facebook gaming is for amateurs.
Right.
Okay, so this is where I see, like, so I'm not discounting them on metaverse, because when the metaverse economy exists and it will grow, everyone will be benefited.
Right.
There is social networking angle also with metaverse, but I do not see them as the leading company in metaverse. I see a lot of companies ahead of them in metaverse because of this macro thinking I have. I could be wrong. Okay, I mean, they can. I mean, I can never. I should never uh, completely write off the innovation of a company which has a lot of cash. But as of today, this is how I think. So I thought that they tried to sell metaverse too much, or I
Right.
mean, it was more a damage control. Same thing we were discussing in terms of Intel, that you want to distract sometime. But while their main cash generation business is still very good, and they
Yeah.
should focus on sustaining it. Okay, does
Right.
that make? I mean, I hope I explained you like my thinking on
Yeah.
Facebook.
Yes. Even I saw on CNBC Dan Niles come and he says like he heard wordings like competition from TikTok, and he started selling that stock from $250. Uh, so everyone's thinking is different. I'm thinking from different perspective. But in metaverse, I feel like Unity Softwares, Roblox, and Facebook, and now Microsoft as well, because they bought ATVS, so it's a big deal. So these four companies have really nice future, and then in semiconductor companies like AMD and Nvidia will support them. From means we also look for the supplier point of view, because it's a huge universe and it will require a lot of support from different companies. So if there is play, we should play from these different uh, companies as well, because
I was
you
having a
heard
chat
that
with,
news. Nike built Nike Land in Roblox.
yeah, yeah.
So
I mean,
uh,
I know. I mean, I was actually advising a fund recently who was investing in a couple of companies similar in the same domain. And I was having a chat with the CEO, which we had like a 1 hour call, and I was helping them. And they said, like, I wanted to understand, and the purpose of the call was to understand like how to imagine things, what will happen. I said to think about it, like if the cars go autonomy level 5, people
right.
can argue it's lidar or it's vision, but one thing is certain, that there is so much money has been injected in system that it will eventually happen in some form, if not level 5, level 4, or something like that.
Right.
Now think about this. Now car has a roof, car has a windshield, car has a windows.
Right.
When people are trying to buy every second of your life, and you have technologies like augmented realities, and you have these high processors and high computing sitting in these cars, what do you think they will do with these things? They will
Right.
just let you waste your time just watching out of windows? No, they will make something out of it. So I said the scope is quite high, okay, but in order to reach that, we need to see a lot of things before that.
Right.
And when we try to lay the roadmap, then we try to see that which are the companies who are trying to follow the first or two milestone of that roadmap. Okay,
Right.
I mean, like, a lot of time even I call like Microsoft a boomer company because they are very good at following each other. Okay, and they always had this monopoly because of Outlook and Windows. But you see, I mean, whichever way you look, Microsoft, and it's not one of my favorite company, but Microsoft is it has a lot of science and technologies and focus that could eventually put them in a metaverse kind of economy. Apple is something that nobody should take lightly because the
Yeah,
kind
they
of thing, the kind of force they come up with. I mean, Apple is a company and a cult together. Okay,
right,
Tesla is more a cult and a
right,
company. Like cult is first and the company, and that is probably. I mean, I love Tesla a lot.
right,
Okay, but I mean, Apple is something that should never be taken lightly. They will make mistakes. I mean, Apple has made massive mistakes. I'll be honest with you. I mean, they have made mistakes, but they learn from those mistakes,
right.
and they actually. So, for example, like one of the biggest mistake I'll tell you what I felt Apple made was, see, at the end of the day, when everybody was building PCs and all these on Intel, practically performance was not very different. I mean, if you have a high end, and especially when you have this high performance gaming machine starts coming, so the movement like this, they took a very hard decision going to their silicon. But their idea was very simple. Now that if we stay with the roadmap of Intel, we can only advance as much Intel advance.
Right.
That was a very hard decision. Okay, and you see, like we saw like how Microsoft tried to go into the arm using SQ1 and SQ2, and that was a massive failure because they did just good enough. And that is different in Apple. Apple says if we are going to do it, we are going to do it in Apple way. I think
Right.
that is something what Microsoft has to learn from Apple, that yes, you want to play the hardware game, you have to aim for the apex performance. There are no compromise when it comes on performance. I mean, this
Right.
is, I mean, that's what I think. That's why I never discount Apple. Okay,
And
it's a
like
part of their.
best thing about Apple is like they are the best supply chain in the world.
Oh yeah, I mean.
So like Microsoft has issues, the Sony has issues with their PS5, and Microsoft has with Xbox, but Apple they delivered all the time.
No, it makes sense, man. I mean, so this is another thing. Like, so now I think one very big question I have, because I think this is, and before I display this question, I want to make disclaimer to everyone, guys. Option trading is for sophisticated investors, and by sophisticated here, I do not mean institution. By sophisticated here, people who study it properly, who model it properly, and who understand what are the risks you are exposed when you buy and sell an option. Okay, so you
Right.
trade a lot in options. Okay, so I want to
Right.
understand why options, why not shares?
So, for shares means if I have been a millionaire or I have a lot of cash, I would have played only shares. But when my capital
Hmm.
is less and I wanted to have nice reward, and if I have conviction on some trades, then I had to do options. That's the only way for me, because I wouldn't be buying like Microsoft at $320 with my $32,000 before the years. I need to play the options, right? So that one of the reason, and it just gets me kicked to play options.
Okay, so one thing I wanna like, if let me know if I get it correct, because see, you have option also to go take margin, but you think that while you are taking with you're playing with option, you have better risk management, and yet you have the benefit of what margin would eventually provide you of higher gains, while controlling your limits if you require to. So you know, okay,
Right.
how much I'm going to lose, and I'm okay with that if I lose that much. But in case of my trade works out, my gains will be accentuated by the inbuilt leverage power that option provides. Is that fair assessment?
Right. With playing options, I never use margin. I only use margin if I wanted to buy top companies like Google or Microsoft. or like Facebook as well, or CRM. I don't use margin for options because it would be risky play and you could like blow out your whole account. And risk management wise, what I do, uh, even I was sure of DoorDash trade. I also had some put debit spread. If that stock falls, I would be having some insurance from other side. So whenever I play earnings, I usually like to play earnings, and these days my conviction is getting stronger. So sometimes there is always possibility you could lose on one trade, but other trade you should make the money. So I hedge stock when there is ER. Sometime when I'm super confident, only that time I didn't hedge. But means I got my lesson with Facebook. I was having $650 worth of call, $320 call, and it fell down to 250, so it became $0 next day at first second of market open. So whenever I play here, I always do some hedging, and I only play some year which is having more than $10 fluctuation in their price, so that I can better manage my risk, and my outcome should be more than what I'm applying money. And sometimes if I have more conviction, I do it in ratios like two calls, one put. And when there is ER, there is always a very high volatility. Means implied volatility could go more than 200 to 50% in some stocks. So that time I always do call debit spread and put debit spread. And sometime when there is a year for a stock like Upstart where it is possibility that it could move $50, then even call debit spread and put debit spread is expensive. So that time I had to do butterfly. So, in recent trade of mine on Upstart, what I did when it came down to $100 on ER day from 109, that time I buy $115 call, then I sold $230 call, and again buy $145 call. So it was a butterfly strategy for $160, and my reward was 1200 no $1340, because it was $15 distance spread. So that was my risk, means $160 risk, but reward was $1360, $1340. So when you have like how much more than 6 7x reward, you should play that. But what happened on the first day, it directly reached to $150. So my that strategy was giving me just $300 in profits, because that option means that butterfly strategy is saying $500, and I bought it for 160. But I waited till Friday because I knew it would settle around 130 $32. And on Friday there was two falls, Thursday market fall and then again Friday, so it came down to 130. So I almost got not $1340, but I almost got $1200 in profits with that trade. So
So there is
equal
one
with
thing I would
equal
like
to
to
implied
there's
volatility.
one thing I like to highlight everyone. So guys, this is very important in options. See, like Himanshu explained everything right from his head, that what was the risk and what was the gain. If you cannot understand and explain verbally right on the head based on the price move what your option exposure is look like in both in terms of risk and gains, you are likely to get burned. That's what I say. Like when option, when I meant a sophisticated, my sophisticated is that you do enough study to eventually calculate right from your head what will be your exposure look like, what is the entry exit strategy will look like. You don't need to do a lot of math. Doing math is good, but you should do enough so that you can do it without looking calculations, and it becomes like an innate ability in you. So thanks for sharing that. I mean, that's something I would, because a lot of time people go to Reddit and they will go to Twitter and they pick the trade and they just copy paste and then they say what
Yeah,
happened. I mean, I
because
did what.
after year day, if you chose the wrong direction, the next day, sure, it would be like $2, $1 or zero
Yeah.
from whatever price you have paid. So there is either you hedge or do something. Means you if you're risking something in option, you're strategy should be, or reward should be always more than 2 to 3x. That's my strategy. If you don't find that reward, you shouldn't be playing in that in the first place.
That makes sense. I'm just reflecting on Daniel. You are right. Like, what happens if the you are? I always try to do options which has large volumes, and for some reasons, the option that is close to the money, or options which have sometime like a whole number kind of situation, like 5, 10, or some. I mean, they tend to have. So even if you see the volume per strike price, you will always see that there are some strike levels has high volume, some dates have high volume. So my idea is try to do any options which has high liquidity, because when the liquidity is high, then as you
Yeah,
rightly applied, the ask and bid spread is narrow. Because if ask and bid spread is too high, I mean, it doesn't look that much in cent, but then it is multiplied with 100 shares per contract. And if you trade like someone, I trade like 500 to 1,000 contracts a lot of time. I mean, I have even traded sometime like 26,000 contracts. So this can be a huge money on top of that. So
yeah.
that is something which one has to be. I mean, thanks for sharing. I think you rightly pointed it out. So, Himanshu, how did you learn about options? Okay, like for what did you do? Because like people, everyone wants option. I mean, I know how I went through learning options, but how did you come? Like this is something which is not you just pick like this, or it's not even looking charts is easier in my opinion than to understand how the option works and profits. What did you do to ensure that you know the right things about options? Tell me.
So when I was in India in 2017, uh, before starting my job in Accenture, I used to go to one of the brokerage house which I know, and they were talking all about that nifty 50 options, or like and they were trading it, and they were talking like I applied 5,000 rupees and I got it like 20,000 back. So I was thinking like, what is this, like how can money is multiplying with this rate within like 1 day or 2 3 days. So then I come to know these options, and mostly this Investopedia helped me a lot to learn every option, their definition, what that means, and what it can do. But now every brokerage has their own pages explaining options, like Robinhood has their help service to explain what options are. But there are some YouTubers as well, and these days there are a lot who explain options from like bottom or like from the start, so you can learn that way. But in option, until and unless you burn some money, you're never able to learn options. And until and unless you feel that pressure when implied volatility changes, you couldn't even able to control your emotions, and before you go through that process, you never able to learn options in reality.
Two things which are very important for me. I mean, I learned in option is the first thing in option you make and you lose money at such a
Very
fast rate
quick.
that you won't be able to react. The second thing is, and this is one of the big difference between shares and option. Like for example, if share is going down, you say, okay, my losses. I mean, I still have a share, and there is you can
Right.
hold it indefinitely if you like, and if you believe in the company. But options are not like that. Options
Yeah,
are time
your
bound.
timing should always be right,
Yeah.
and that excites me, because the main excitement about options came in my life when I saw 4th February 2020, when Tesla went from almost $600 to $978. That time I saw uh, $775 call was $30 the previous day, and in next 2 days it went from $30 to $19,600. So after, when I saw that, I decided I should be means expert in options in some few years. So from that point, I started playing options. I have lose much in option. I have won big in options. Both things happen. But nowadays, uh, back in that time, I didn't hedge, or I just go in one direction. But these days, I'm started practicing hedging. Means with hedging your reward is getting lesser, but if stock give you a nice move, and if you play ER on like Wednesday or Thursday evening here, which is pretty close to Friday. So that time option prices reduced much. So that time if you play and if you even hedge, you could get at least 2x, 3x on options. So I want to be a perfect in that thing, timing the market, because means that phrase is pretty wrong to me. You shouldn't be timing the market. Only the timing the market can give you higher risk reward. So, and
Yeah, I mean,
option
I
there,
agree with you. I mean, I don't have talent to time the market, so I never try to time the market. And
right?
but yeah, I mean, I'm still retired and living on my investment, so I think it works out for me in
Like
one way or other.
if you go back and check, even in like stock like Microsoft, who didn't do anything between 2000 to 2016. So if you are just buying it and just holding it, it doesn't make sense. You need to time the market, because we in our age we don't have time, right? We
Yeah,
get older and older, and our needs should be meeting an current time frame. So
no, makes sense. I mean, so this is why I want to share with everyone. I think there is plenty of information that is available on internet, books, YouTube, where you can go and you can actually learn options. Okay, but what you cannot do is you cannot summarize the learning of 2 years in one day.
right.
So you need to understand, you have to spend time on it. You need to do paper trades, similar trades. You ask question to people. If possible, get some friends together where they help each other to learn options. Okay, try to watch some videos on it, some of the people who really explain it well. But yeah, I mean, if you think that today you don't know option and tomorrow you'll be the guy who can get 1000x return out of option, yeah, I think you're not smoking the right thing.
Right.
So I think
If
this is one. Yeah, please go ahead. Please go ahead. You were about to say something.
No, I was like, just in option, it's always gets crazy. So, and you can't even learn with paper trade much, because when trade goes against you, you can't able to feel the pressure because you are not applying the real money back then. But when you apply the real money, an option is not trade like stocks. It could move like 25%, 30%, 50% within a day. You could go down 50% within a day. So that time you need to hold your emotions, and only do option when you have a really big conviction on that trade, either side, short or long, doesn't matter.
Makes sense. So I think just one question on this one, because I can share like how do I control my emotions. My emotions idea is very simple, that when I plan a trade, I try to simulate as many scenarios as possible, including good ones and bad ones, and I try to write it
Right.
down or at least know that what I'm going to do if it happens. So when it happens, I just do. I don't freeze
Right.
anymore. I just do it. I mean, because I know that if you go into the emotions that time, you will likely to make a bad decision versus a good one. What do you do to control your emotions
uh, in options,
in
uh,
options in trade?
mostly in options, if my premium is burning 10-15%, and if I don't have much conviction, I just cut my losses. And that's the biggest lesson I learned from Twitter, I mean swing tweet Kaushik, that you have to cut loose your losses. At least in option you have to cut loose, otherwise it's always zero or hero game. So
Yeah,
if I buy $600 worth of option, and if it their prices comes down to 520 or 500, I just cut loose, because I had some mark levels. Only on that levels I apply call or put, and if that time it doesn't falling, I just cut it loose, or
So,
like I
so
just
I mean,
square off
correct
that.
me. I mean, if I get it right, you're saying that when you do your option trade, you still focus on a very high capital preservation mode, and you try to be very selective when to open a trade in terms of breakouts, in terms of price range level, in terms of implied volatility and the selective day. But if the position moves against you very fast, or eventually fast, and you get into trenches with around 20% losses, whatever happens, you have a discipline to cut down your losses and come back.
Right. So,
Okay, I think.
what happens in Asana trade? I went short on Asana, and I was in a meeting or something, and single day I lost 75% of my premium. When
Hmm.
Dustin was buying a lot of shares back then, so that time I understood I had to put some stop losses even in options, and I do it strategically depending on premiums.
No, makes sense. So, Chris is asking a question. Do you ever use debit spreads? My understanding is you do. Is
Yeah,
that correct?
call debit spread and put debit spread. I usually do that because I don't want it to get into like implied volatility. Because sometimes if you just do call and put, and even if you just hedge, means naked call, naked put, your price increases a lot. You have to reduce your price. So on earnings, most of the time I do call debit spread and put debit spread. And on Palantir question, I have $15 call and sold $30 call, call debit
So
spread.
just want, yeah, just for everyone to understand, like, I mean, why spreads have slightly inbuilt resistant towards implied volatility change, because you have two positions. One is short, another is long. So normally what happens
Right,
is if your implied volatility go low, your option premium, giving everything else is show, should go down. But since you have opposite position, okay, they are not one to one opposite, but they are opposite. So your net effect of implied volatility is kind of counter off, especially when it is moving against you. When it is moving up and it is increasing your premium, what is protecting you is your strike price. Because if your strike price, which is closer to, I mean, if it's a debit spread, I mean, that is something which you still have to move the strike price of the upper layer to actually lose the gains from
right,
there. So this is a strategy that has a different kind of connotation. And what it does is that first it allows you to control a lot of stocks, okay, especially
right.
if you expect to move in a certain range, and the capital you deploy is not that much as you will need in terms of stocks, and you also get some premium back, so that will offset some of the capital you're also deploying in terms of
Yeah,
options. But you need to understand before you do it, it's a risky trade if you don't
right.
understand it. So
It just debit spread just increase your risk reward.
no, it's okay. So let me just run through with some of the questions I have. I mean, some of the people have asked earlier as well. And so this one, Daniel asks if interest rates go back down to take out a mortgage, buy high dividend stocks. I mean, I wouldn't recommend. I mean, I don't recommend.
And at this price, if you buy dividend stock and hold for like 3 years, there would be capital losses. You would get the dividend, but there will be capital losses.
Yeah, again, I mean, like, this is our opinion. I mean, we're not advising you in terms of the financial
Yeah,
expert. My idea is like, I do not want anyone to invest in stocks by the money borrowed.
yeah. That's just my
So
idea. Means if you ask me to buy Coca-Cola at 62.5, I never do that. I, in fact, went go short on that one. Because of all the growth stock falling, everybody started buying these value stocks, and now value stocks are like more expensive than growth stock. Means I would buy
oh, I agree.
Facebook because it is growing by 20%, and Coca-Cola is growing by 4, 5 or 7%. Why should I buy Coke?
Yeah. So Emily will ask that do you recommend diversification for a retail investor? What do you think on diversification, Himanshu?
Yeah, diversification is always a good thing, but as Warren Buffett said, you need to have conviction. And if you play on conviction, if you choose just three stock without diversification or anything, but have best story or sector macro in that side, you could gain a lot. But in these days, like I don't recommend holding more than 10, 15 stock in portfolio. And now I am saying SaaS cloud stock, cybersecurity, and semiconductor. These three sectors are having positive macro on their side for 3 to 5 years. So if you could find some nice growth stocks in that field, it would be a nice idea to buy them.
So my view on diversification is following. I think a lot of time people confuse diversification in terms of buying a lot of companies. My
Right.
view on diversification is like, if your stock portfolio and all the stocks in portfolio is moving up and down in the same direction with the market trends, dude, you are not diversified.
Right.
I mean, the
Means
diversification. Yeah,
diversification comes with, if you have negatively correlated stocks, like if you're long on Tesla, you should also be having Chevron or ExxonMobil in your side. And if you check last 1 year, whenever Tesla was topping, Chevron and ExxonMobil Mobil was at downside, and whenever inverse happened, they went on like all-time high or like 3 months high in that time frame. So now Tesla is almost 300, no, 400, 450 points down from top, but Chevron is making top. So if you could find such negatively correlated stock, it would be a nice diversification. But if you find it, then
makes sense. So now I think one final question. Okay, now, so what's going on with Palantir, dude? I mean, do you know that Palantir is turning into at times even more divisive than Tesla ever been? I mean, Tesla, there was like idea, okay, but people said that they don't like Tesla. They said, okay, EV is not happening.
right,
Okay, that was one thing. Now, in case of Palantir, this is even funny thing. Everyone is saying we are going to become digitalized savvy. The market is going to extend like Kathy said, 87 trillion only by AI. I mean, I used to lead
right.
a digital strategy for a $50 billion company. So, I mean, there are like, there's like huge macro. Government is coming and they're saying that we are going to spend more money on AI and SaaS. And then people say that, okay, Palantir is a bad company. And I mean, you saw what Kathy's flip flop recently. So at the end of the day, I mean, you've been in industry, you know the industrial side, so you understand the context of B2B. You have seen supply chain uh, quite in depth. You know, I
Right.
mean, like what a software like Palantir, well, whether it can help supply chain issues or not. So, what do you think Palantir as a company?
Palantir as a company, it's a really good company. And two, 3 points I really like about Palantir is like their product. They are more advanced and they're pretty much advanced than the time we are in currently. And with stock price action wise, I think market it doesn't liking the stock, but they are beating everything. They are saying we are gonna, means whatever guidance they are giving, they are beating that thing. They are growing more than 35%. Means they actually said they will be grow by 34%, but they grown by 41%, right? So they beat that as well. So and same thing can happen for 2022 as well. But price action and I can tell you, gore, whatever the contract government is having with Palantir, and if someone is saying there would be a competition and government will like to change Palantir solution with other one, I don't think that could be possible because Palantir is rooted in so big in government to replace that. The product should be a very good, and still there would be an integration problem. And Palantir is a really good as a product. I have seen their demos with Gotham and Foundry for like hours and hours videos their analysts put on Twitter, YouTube. But price action wise, you there are some companies you need to believe on company and their CEO and their work and hold it for a while, like 2 3 years. And if someone doesn't have Palantir holding, this is the really good time to buy Palantir. And if you still wanted to hedge something or earn money out of it, or like you wanted to improve your risk reward, I would say uh, I'm planning to sell some 10 put contract on $10 strike for uh, maybe March or May. I didn't decide it yet, to get some premium. And when I get those share, I will be selling January contract for 17.5 or $20 to get some cash for my holding. So I'm planning to do that.
No, I agree. I mean, see, you take PS as one of the key marker also because you know that if a company is investing in its growth, I mean, PE and some of other metrics can be. So, I mean, I'm a big fan of operating leverage. I'm a big fan of operating margin, how the revenue is growing. And currently, the PS for Palantir is like 15.
Right.
And
Means PS is 15 and growth is 41%.
yeah,
So it's on discount. Uh, and their only issue is they have that 2 billion float. That's the only issue I always think they will be having. But that's not much of a problem because the Coca-Cola is having 4.2 billion outstanding share. They still move that stock
Apple has a lot of. Apple has
16
more.
billion almost. So
Yeah.
yeah, means when market actually started liking that story in a big, means I have seen CNBC contributors, they are like some contributors are like value investor, still though they bought Palantir for $24. So they must be having some thinking to buy Palantir at that price to sales, when they are on the other side they are buying like Coca-Cola or Lumen Technologies or like a value stuff like Procter and Gamble, and they still believing to buy Palantir on $22 or $24. I didn't understand Kathy Wood's move. Means she had that habit to buy higher, sell at lowest possible price. So I won't be commenting on that. But my thinking is, if someone doesn't have Palantir before, this is actually a good price to buy that one. Means it's just my suggestion. I will be doing that thing.
Yeah, I mean, again, I mean, this is like we're discussing our views, guys. Here, we're not giving anyone any financial
Yeah,
advice, but this is what we think, what we want to do, and why we want to do. I think one of the thing which I have been in discussion with very large companies who spent half of their day in the workshop with me explaining that they are almost as good as Palantir. So my question to them is always comes like, if you are always as good as Palantir, why don't I go with Palantir?
right.
I mean, if you're so this is why like I mean like a lot of time like when companies like Lucid and Rivian says we are as good as Tesla. The point is if you're as good as Tesla, then I go with
Your
Tesla.
product may be good, but do you have a scalability or supply
Yeah.
chain?
So the reason is like the people does it because I mean I invest a lot in private companies. Okay,
Right,
I review on daily basis 4 to 5 private companies because I advise funds and they tell me, okay, what do you think of this company, and I have to complete my thesis and send it back to them. And a lot of time in private companies, I come across this logic that because this company has done this much and we are exactly doing the same, so we should be valued as that much. And my answer is that I immediately take a lot of these companies out because I wanna judge you based on your execution prowess. I understand macro. If macro
right,
is the reason I'm going to invest in you, then I will always invest in the leaders. And you are
right,
telling me you are copying leader, you're not. So this is what happens. Like when I see companies like Rivian and Lucid, see, they are trading on multiples that is far higher than Tesla, and a lot of
right,
people are uncomfortable with Tesla. So when they are doing this, the reason they say they are doing everything what Tesla does is for a very simple reason. They want a high multiple. It doesn't mean they are going to do it. They
right,
haven't yet even proven their execution prowess that they can really scale up to that. But
right,
they do 40 things they don't do what Tesla does. The only reason they say and they claim, and media helps them to claim, is because that allows them to sell on a multiple, which is
right.
unjustified in my opinion.
Means like they are not selling 1,000 cars and they want like 100 price to sales or 60, more than 60 price to sales. It's just pathetic, I would say. Means I didn't trade Tesla in my lifetime. No shares, no option, nothing. But I have shorted Lucid Motor a lot of time. I even shorted Rivian. Because like $179 on Rivian, it's kind of a
Ah,
joke.
it was, man. I shorted few shares as well on that time.
Right.
I mean,
Because you are saying you do that, but on current time frame, you are not doing that. And why should we give that multiple to you for like next 5 years? Then what would be the price after 5 years? Means there shouldn't be any increase in price if you are directly buying it for that multiple today.
no, I agree. I mean, and this is what one of the things which I realized is that this is why I try to stay. I mean, I try to stay with companies, and Palantir is one company. It took me like 4 years to study them before I actually
Right.
invested in them. I mean, it's not
So,
something which I did easily.
means with Palantir, I have also invested in Snowflex. I bought it for $187 back in May. I started selling from 310 to 345. Then again, it went to $400. But in this fall, if it also comes, means in January 24, it came down to 232 on 28th, I guess, Jan 28th. Back that time, I didn't bought it, but from that point, it went to 327. Now again, come down. So in between these all geopolitical issues, if it comes down to 210, 225, 35, I would buy some Snowflake. So at least I know one both company will be successful in the future. But even though my thinking is different, market thinks the other way. I should be having invest in both the companies. So I should be right at least in one company. So
No, I think that's very important. I mean, so Himanshu, I mean, I really had a very good time with you. I mean, is there
mm,
any last thing you think, for example, going like what is happening in the market in terms of macro, in terms of interest rate? Is there something you have an opinion or a view that you think will be helpful for everyone to listen? Please do share.
So the last thing we just need to do as a when there is a dark ugly red day, you should be having your red day watch list or red day stock buying list, and on that red day you should be buying something which already beat the previous quarterly result and raise the guidance for the future, like another quarter or for the year, and only those companies could give you nice return for 3 to 6 months. So now I'm thinking to buy Google if it comes down to around 2500, 2550 between this March 18, because they have story with them. They're even saying they will be building some privacy uh, instrument or softwares or maybe technology on their side, just like Apple. So that story is along with them. Then they will be splitting it 20 as to 1. So that's another point. So whenever there is split, we all know stock goes up. We seen it with Tesla, we seen it with Nvidia, we seen it with Apple. So that another point. So for conservative investor, probably Google is the best choice for 3 to 6 months. I will be doing some other trades as well. Like in growth stocks, I will be acquiring CRM because CRM, I like Mark Benioff, and he said they will be reaching $50 billion in revenue by 2026 or 7. So even we take 8 or 10 price to sales multiple, it could go 400 to 500 price range. And now it's trending much below their fair value. Like fair value is 320, I guess. So it's nice buying opportunity. And if it comes down like even means already started buying it, but even if it comes down to 160 or like 155, I will average it. I don't have stop loss on CRM or Facebook. uh, so that could I say. But this is for long term investor, and whoever trading it for 3 months, 6 months, he just need to focus on beat and raise guidance list, because only those stocks can reverse back way faster than other stocks.
No, it makes sense, man. I think this is very helpful discussion overall. I think I learned a lot. Okay, and one thing which I want everyone to remember from this discussion, and this is what Vikas also pointed it out. See, good investors knows it all from their head. They have done it so many times. They're thinking at the end of the day by summarizing all the information and by digesting all the fact is actually very simple.
Right,
Okay, and we, I mean, this is what I believe. Investing has to be a natural extension. Okay,
right,
if you have to watch your investment on minute by minute basis and you ask thing and somebody says something and your opinion change, yeah, dude, you are in a wrong company and you are in a wrong
right,
habit of investing. I mean, this is investing should always be a natural extension. And guys, I mean, ideally, people who do investing they do it for years.
right.
So patience is
Means
is, is key as well.
patience is a key as well, but for chutney money or like for smaller time frame, we should be having some sweets. So for that, I my approach is completely different than long term approach. And the year like 2022, where is VIX is continuously rising and comes down again rise. So it's like up and down. You should be playing that because those creates good opportunities to gain. Means if you get 10-15% 10 times within a year, so that would be 100%, right? Or more than 100%. So you should capture that and don't feel anything. Even if trade is going out of your side and you still like that company and market doesn't like it, don't wait, cut it loose. Only if you don't have long term vision on it. I cut it loose lot of time. Like last week I bought Confluent for $52.5, but I had stop loss at 51 because that was the level it could fall to $40. And then my stop loss trigger, I lost $150. But then it could directly means next level support level comes down far below that, so you had to cut loose even if you like the company.
No, I agree. I mean, this is, I think, something which people have to remember, that a good investing process doesn't guarantee all win. The
Right,
good investing process only guarantee that it doesn't matter. You can lose 80% of your trade, but at the end of the day, if you are doing it diligently, right process, right stop losses at times, you eventually make money. So it's the process and consistency that is more important than sometime one trade or two trade here and there.
right. Thanks Vikas for saying this thing. Vikas is a good friend of mine.
It's I think it's he's right. And this is important. I mean, like I see even a lot of big people sitting on CNBC, and I mean, you can see their eyes are reading teleprompters.
Right. Yeah.
Okay, so this is what people don't appreciate, that investing has to be a natural extension, nothing more than that. When I really appreciate, I mean, I enjoyed my discussions and interaction with you for our last 1 year. I learned a lot from you, and this is why I thought that I think it will be good to bring you in, because you have some innate ability to pick companies and build conviction, which is not common. So I think
Right.
there will be people who would like to who would appreciate it and probably learn a thing or two from this. Really appreciate, man. Thanks for
And
your time.
thanks, Sachin, for inviting me. I also learn a lot things from you, mostly business understanding, because that's the thing. Because of my age, I couldn't understand the way you understand things because of all the experience you have. So I appreciate your all big posts. I usually go and read it. I even save those posts sometimes in my notes. So yeah,
No, man. Feel free, man. I mean, we are connected on LinkedIn, and if you have any question, reach you. I have extensive network. You can see whom I connected. If you think
right,
anyone of, I mean, like once you finish your MBA, you wanna go for a different career, you can always, I mean, ask me to connect with any one of my network. I really appreciate everyone who joined, and I hope that this discussion would have got you thinking couple of things, and you probably pick one or two good things that eventually help you in improving your investing process. None of the discussion we shared was financial advice. I mean, we
right.
just shared our view. So yeah, I mean, do not trade or do not invest based on our ideas and our examples. I think thank you everyone. Really appreciate.
Thanks,
Goodbye.
Dheeraj. Thank you, everyone.